How can life insurance help with creating savings and cash for your real estate needs? Well, welcome to my podcast, Seeking Wisdom Through Real Estate, where we dig deeper into truly understanding and gaining knowledge from experienced and educated people. I am your host, Leah Massey, a real estate agent who is trying to educate myself and take you along for the ride. Every week, we will be bringing you information to help unlock your understanding in real estate. So join me today with my guest, Bernard Mack.
How you doing?
Good. Thank you. So here's a little bit about Bernard. He has 30 plus years of insurance experience. He is a local State Farm insurance rep. Bernard and his team provide coverage quotes and policies for insurance needs, and his office is in downtown historic Elizabeth. So, Bernard, so you have 30 years of insurance experience.
37.
30, 30 plus, okay, 37. Can you take us on that journey to where you are now?
Um, okay. Well, I'll begin. Uh, born and raised in New York City.
Mm,
Um, a product of both public school system in New York, but also private school system because my folks didn't like it. So I went to
mm,
St. Peter's in Peekskill, New York.
okay.
Graduated there. Was selected to come to the University of Pittsburgh in 1968. After graduating from University of Pittsburgh, I was in retailing with Sears Roebuck and Company for 14 years,
Yeah.
and I was a store manager. My last position was a store manager of a business system store, selling computers to corporations, and that enterprise failed.
Mhm,
Therefore, I was given the opportunity of going back into retailing, but I decided not to.
mhm,
Therefore, I was unemployed for a year, and I had State Farm Insurance, and Ken Backman, who was my agent, asked me if I wanted to become an agent, a State Farm agent. I said, "State Insurance, come on now, polyester suit knocking on doors now."
mhm,
I was not into that, but with State Farm, you are your own boss. You're an independent agent. So I decided, okay, let me try. Went through extensive training, and I was brutally honest. And with that, I thought, they're never going to ask me to become an agent, but they did.
mhm,
And I became an agent after going through all of the background checks, compliances, things of that nature.
uh-huh,
August 1st, 1988 was my first date as a State
uh-huh,
Farm agent in Elizabeth, PA. With State Farm, there's over 100 plus products in which we are able to sell,
mhm,
in which I don't sell them all.
mhm,
I do have a very capable staff that assists me through the 37 years. I have Janet Caffini, who's my office manager. She's been with me more than 21 years. Then I have Barbara Bowen. She's been with me part time for the last 5, 6 years.
mhm,
I only have two staffers right now, but we do well. But anyway, as far as your question, um, insurance.
yeah, just kind of what how you got to where you're at now with the insurance. And that and like so you because you've been at you started in the 80s?
I started in the 80s.
Okay.
Yes.
And was it at this same those same location or?
Same location, three different offices within historical downtown Elizabeth.
Okay.
Yes.
Okay. And your story, it was funny because when you said you were off work for a year and then
Hmm.
they asked you, your agent asked you about being an insurance agent. And I just had a podcast with a real estate agent who also, same situation. I was out of work and she was selling my house and she had asked me everything about being a real estate agent. So it was kind of,
Okay.
that was
Yeah.
similar when you said that. And I
Exactly.
was like, I didn't think about that, but here I am. Yeah. And here you are after all
Here
those
I
years.
am.
Yeah. So, could you let us know a little bit about what is insurance?
Okay. Through the history of insurance, there are hybrids of traditional insurance, which is term insurance and whole life insurance.
Mhm,
That's what I'm going to concentrate on, particularly with real estate.
mhm,
term insurance is temporary insurance. It covers you for a specific period of time, 1 year, 5 years, 10 years, 20 years, whereby during that time, it's almost like renting an apartment. That's your lease. That 1 year contract is your lease. But after that first year, the cost might go up because the older you become, the more costly insurance is because you're getting closer to mortality.
Mhm.
Okay, so therefore, term insurance, you can get a large amount of coverage for a very low price. For instance, let's say $100,000 and for $10,
Mhm.
okay, per month. So therefore, if you continually pay that $10 per month for that 1 year term, if anything happens to you, then your beneficiary, for whatever reasons they want to use that money
Mhm.
to pay off debt,
Mhm.
to pay off a mortgage, to create a legacy, they can
Mhm.
use that money during that period of time. But if you stop paying during that first year and you die, if there is a lapse in coverage, there is no obligations for that insurance company to pay that $100,000 to your family.
Okay.
Um,
And that lapse, what do you mean by that?
you do not pay, you stop paying, you get notices that your policy will cancel on a such and such a date if there
Mhm.
is not a payment to continue the coverage. You neglect to,
Okay.
there's nothing there.
Now let's talk about the whole life then,
Okay.
since we're
Whole life policy is like buying a house.
Mhm.
Okay. Um, no matter if it's for life, it's for your entire life. So if you have a policy that is $15 a month, it's going to be $15 a month from the time you buy it until the time it terminates or
Mhm.
you die.
Mhm.
Okay. Um, my mother's 100 years old,
Oh,
and she had
wow.
we had a whole life policy for her. That whole life policy was good until the age it converted it up to the age of 100. So therefore, she no longer have to pay any premiums into the policy, and she has a whole life policy um, for the amount of the whole life policy.
Okay, premiums means she doesn't have to pay
She
monthly? Okay,
no
yep.
longer.
Okay, all right.
Um, with a whole life policy, there are many benefits to it other than a term policy. Number one, again, the premium remains the same for the entire time of the premium.
Mhm.
You are also building up equity by which there's a cash value that is slowly, not quickly, but slowly being increased over the years. Um, as it relates to real estate, if you have a very sizable whole life policy with a nice cash value, which is equity, then you can use that money in order to invest in and I've done that, to invest in
Mhm.
real estate, um, to get collateral for a bank. You have this policy, I have this value. Okay, you see what I have.
Mhm.
Therefore, I would like to borrow monies from you and use that as collateral.
Mm.
So there are many ways by which you are able to use the 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 cash value in a whole life policy for real estate.
Oh, okay. So you don't necessarily have to take out the money. You
No,
can just okay.
no, you can show it that you
Yeah.
have monies, or you can use it as a down payment.
Mhm.
You know, um, so there are many advantages with a whole life policy as far as equity. With a whole life, even if you put a lot of monies into it, you are basically creating your own bank.
Mm.
Okay, because you have equity in that whole life policy, and that's where a lot of millionaires and billionaires do.
See, that's what I wanted to talk about. How does that look? Can you take us in on that? Like, how would that look when you're saying they invest a
They
lot?
have enormous whole life policies
Mhm.
or insurance policies, and they use that money um, in order to either buy real estate or use it as collateral towards the purchasing of real estate. Uh, I mean, and I'm talking about millions and billions of dollars. It's phenomenal. As far as you and I see it as number one, you are able to use whole life policies to um, pay off debt. If there is a premature death, you have monies enough to um, pay off debt, pay off your mortgage, also have more monies for your surviving families to survive on,
Mhm.
and creating a legacy.
Mhm.
So, therefore, Jacob will have monies
Mhm.
in the future if anything should happen to you. You could put that monies into a trust, and your kids can begin having that monies at whatever age you designate in that trust fund. So there's a lot of options that are available with a whole life policy.
Now, when I know you said that equity kind of adds up slowly, is it depending on how much you're taking out for the whole, how much you're paying a month? Like if you're paying out more for a policy, how
Well,
does that look with that?
if you're buying a $15,000 policy, the equity is not going to be as great as you're taking out $1 million or $2 million policy,
Mhm.
because the premiums to support that benefit varies. So the greater the amount of your death benefit, the more equity is going to be realized in your policy at a quicker period of time. The first 2 years, you're not going to see anything because the expense of the insurance, um, underwriting, things of that nature. But after that, it will start accumulating, when particularly if the economy is good,
Mhm.
particularly if companies are making money with the investments in which they realize,
Mhm.
you will see more dividends
Mhm.
in as far as your realization. If there is a recession, then of course the dividends are not guaranteed.
Mhm.
Okay, you're not going to get they're not guaranteed, but it's something that, well, State Farm has been giving out dividends each and every year since life insurance begun with State Farm back in the 30s. So
Okay.
the strength of your company will determine exactly how many what the dividends.
So yours is done in what way then? Just real quick.
State Farm invests the monies, and then monies creates a reserve so that if anything happens catastrophically, there's enough monies to take care of all of the losses that our policyholders have.
Mhm.
But yet, there is monies that is put aside and divided amongst our policyholders, versus monies being realized by stockholders through acquisition of
Okay.
stock.
Okay, I got you. Now, say if somebody, when is the best age, right? I mean, or when did you think the time for people to start getting that to invest?
As young as you can. The young, I regret a good friend of mine, um, many years ago, while I was ignorant, says, Bernard, you should buy whole life insurance. And I said, whole insurance? Why? I'm young. I don't
Mhm.
need no insurance. But I wish I would have put monies in, disciplined myself to
Mhm.
have a whole life policy at that early age. That would have been tremendous as far as me having more assets now when I'm 76 years old.
Mhm.
So,
Yeah, okay.
I'm almost on the top of the mountain. you
Yeah.
know, so
Well, I don't know. Your mom's 100, so
yeah, exactly. Yeah.
yeah,
So,
yeah.
I recommend that young families invest, have
Mhm.
the discipline to make sure that insurance is in their portfolio.
Mhm.
I mean, I don't see it as a savings plan,
Right.
okay, but I see it as a way by which you are able to acquire assets which you can use whenever it's necessary, needed. More so whole life than term insurance, because term insurance, you just insuring something. You were buying a house, all right,
Mhm.
and you want to make sure that if anything happens, the house is going to be paid off. But after 30 years, you might not need that term insurance any longer because you no longer have that obligation.
Mhm.
Okay, but with whole life, you are accumulating equity, uh, and you will have something. You monies you put in, you will absolutely get back with a
Mhm.
whole life policy. It's guaranteed. That's etched in stone. Whatever you put into that policy, you're going to get back, either in the forms of your cash value or the death benefit when you pass away. So you're
Mhm.
going to get that money back.
Right.
Okay. With term insurance, no, because it's term. After that 5 years, you have nothing. You just walk away. That that term insurance took care of you from the day one, from the first day until the end of that 10th year, which is the obligation of that contract.
Well, how does someone start, like, when they come to you and they wanna start, how does that usually work?
I would firstly, um, I sit down with them
Mhm.
and we go over what is called um, a needs analysis.
Mhm.
Why do you need it? Okay, do you need it for life? Do you need it for income? Do you need it for family? Or do you need it like for equity?
Mhm.
Um, Seeing what we have to offer, if it is something that you are able to begin religiously, um, place it and see it as a monthly um, cost that you must pay into on a monthly basis. Um, and then we determine exactly your health,
Mhm.
ask questions about your health. And then after that, if you're willing to begin, we will. If not, then we will discuss it in the future.
M'kay.
So some people come in, um, and we start it immediately. There are some that it's necessary because of health issues that there is a doctor's examination in which State Farm will have a doctor or a practitioner come to your home and take your vitals, go over your medical history, and at that point, it's determined if you are um, insurance worthy or not.
Mm. Okay.
Because I've seen people who have realized a debilitating ailment and they come in at the last moment, but there's nothing that can be done
Mhm.
because of that ailment.
So it's like, isn't it a certain age, like if you have your child or somebody that's younger in their 20s, they don't have to have that medical exam or everybody does?
If you have a child or a term rider, no, they don't need to. If
Okay.
they're under the age of, let's say, 20, no,
Okay.
unless you know that there is the child has an ailment.
Oh, okay.
Okay, but you must also make that known.
Mhm. Yeah.
Because some people try to hide it,
Yeah.
and it
It'll
doesn't
come up.
work.
Yeah.
No,
Yeah.
it doesn't work.
If you just wanna just let the viewers know what else you do that you're.
Homeowners,
Mhm.
renters, auto, business insurance. Um, I do health, but I really don't do health. To be honest with you, I
Mhm.
don't do that. Um, like I say, disability income, um, boat owners insurance. We do. I do beauty shop insurance, small business insurance. Um, I do a lot.
Okay. Yeah.
And, I never sit back and say, "Whoa, why, yes, I do a
Yeah.
lot." Yeah.
What do you mostly get a lot of that? What's the most that what area of work are you seem like you get more
Homeowners and
clientele?
auto,
Okay.
that's my bread and butter.
Okay.
And life insurance is third.
Okay.
Yeah,
Okay.
yeah.
All right. Feeling hungry. Um, okay. So what would you like for the viewers to remember and take away from this interview?
Well, I hope it wasn't too confusing. If you have any questions or concerns about life insurance or any type of insurance, um, give us a call, and we'll do what we can. We're honest. We're very honest.
Mhm.
Um, We only sell to what your needs are and what you do need.
Mhm.
Um, because you know where my office is, and I don't want anybody knocking down my door looking for
Oh,
me.
that's okay.
You know, so no, my team members are very helpful, very courteous. We do the best we can for the community,
Right.
and that's that's what life is all about.
Yeah. Well, I wanted to ask you, I didn't wanna, because us realtors, we always kinda, I see you got that big banner, the, the billboard, I
Yeah, the
mean.
billboard.
Um, how have you got a lot of, is the billboard giving you a lot of referrals from the billboard? Or how's that? I'm
Not
just curious,
really. It's
yeah.
just presence.
Yeah.
Some people. Oh, I never knew you in Elizabeth. Yeah, I've been here for
Yeah.
37 years. So so you sometimes you feel you drive and you see yourself. Oh, okay, I'm a celebrity. No, it's not that.
Yeah,
No,
yeah,
they're not knocking down
yeah.
the doors. I saw your billboard,
Right.
but one billboard. People say, "Oh yeah, I saw your billboard in Monroeville." I don't have a billboard in Monroeville, so
Yeah.
it's comical. It's it's a presence in the Elizabeth area,
Right.
you know. But I've even had people say, "Well, why don't you take your billboard down because you're you are what did he say? You are I should take it down because I'm it doesn't look good." I says, what are you talking about? Just dumb stuff. What?
Well, that's how I found out about you, so it
Oh,
worked for me.
okay, good. All right.
And I noticed you had one that was the electronical one by the bridge,
I had one by
and
the
then now
bridge.
you have this, so did you, any difference with the 2? Did you kinda,
Cost.
okay, yeah, I figured.
Cost.
Okay.
Yeah.
Okay, yeah.
Yeah. It's not cheap. It's
Yeah, I know,
not
yeah,
cheap.
it's not, yeah.
No.
I was looking into that too, but I end up I went with the cheaper option, putting it in my hometown and just kinda putting it a little, yeah.
Exactly. Yeah.
Yeah.
But people are reading less
Yeah.
than they have in the past,
Mhm.
and it's um, social media is tremendous. I never realized that.
Mhm.
I had a lady come in a couple of days ago, and I asked, "Well, why did you decide to come to my office?" I saw your reviews on Google reviews, and they were very good. So I'm here. I said, "Oh, okay."
Yeah.
But younger individuals use it much more than I
Yes.
do.
Yeah.
I'm a dinosaur.
Mhm.
I'm
No,
old
no, no.
school. Yeah, I'm old school,
Yeah, yeah.
But the younger agents, they're using it all the time and they're being very successful with it. And I commend them for it.
Yeah,
Yeah.
yeah, yeah,
Yeah.
that social media
Yeah.
stuff.
I don't
Well,
I'll divvy into it a little bit, but I'm not going full
you're up there a little bit, I
force.
mean, you got the, billboards, so I mean,
Yeah,
that's
exactly.
yeah,
Yeah.
yeah. And, so my, podcast is Seeking Wisdom Through Real Estate. So what's a piece of wisdom that you would like to give our viewers today?
Real est- if you are able to invest in real estate, do it. Um, land is very sparse now. There's not a lot of land.
Mhm,
So if you have land, um, hold on to it because it will appreciate eventually.
mhm,
Um, invest wisely.
mhm,
Um, get good. Um, have a mentor who is involved in real estate
mhm,
and um, always look over your investments, no matter if you have, let's say, a manager that takes care of, collecting rents or what have you.
mhm,
Always be involved
mhm,
in the process of your business. You have the final say. It's your responsibility, so you have to deal with it. As far as home is concerned, um, make sure home, there has to be a checklist of maintenance because home ownership sometimes is not easy
mhm,
and can be costly. And the keep it in keep it in as good of order as you possibly can.
Mhm.
Some it's difficult, but do the best you can with that ownership.
Yeah. And that's why having maybe a whole life earlier in life can have money you need to help take out and fix out. So
Exactly.
having those options of putting money aside in saving areas you can
Absolutely.
use for help.
Instead of placing it into a real estate, well, not real estate, but a retirement plan where you cannot touch the money until you retire.
Right.
Yeah. You need options.
Right.
You need financial options, and whole life and term
Yeah.
insurance is an option that's available to everyone.
Yeah.
You know.
Well, I appreciate you coming out, Bernard. How can people reach you?
Well, I thank you for the interrogation. I appreciate it. I'm kidding. uh, Um, my office is 412-384-5580 or bernardmack.com or Bernard Mack, Bernard.mack.cfeg at statefarm.com. Look me up at Google.
Mm-hmm.
Um, there's a lot of ways,
Yeah.
a lot of options.
Well, maybe after this interview, whole life will not be number 3 anymore.
I would. That's a good thing. Yes, yes.
Yes.
Keep me busy, please.
Alrighty. So, if you have enjoyed your time with us, please like and subscribe to my channel. See you next week when we seek more wisdom through real estate. God bless.